Hey all, welcome to the Brent Bruce Daily. Today is August the 12th. It's just after 2 o'clock Central Time. Just such a beautiful day out here that I wanted to get out and do the report from on the porch. All right, so let's take a look and see what we saw the last couple of days, where we are right now, and what we are anticipating for next week, which is really what we want to know. So again, kind of summarizing, last Friday we had an employment number that came out stronger and more positive than we had anticipated. Home loan interest rates like that. Then we got to the consumer price index, which was on Wednesday of this week. I anticipated inflation to be high. I was wrong. Inflation numbers came in lower than expected. Home loan interest rates like that. Then we came up against the producer price index yesterday. I would have said that we should have seen inflation hot. Well, we saw that the headline number came in with inflation not hot, kind of cooling, which again we talked about that most of that was baked in through energy, which was the gasoline factor that we're seeing a big difference because of. Again, I don't really buy all of it, but that's where we were. So home loan interest rates began to improve. However, we had a 30-year bond auction that came out, and guess what? People were more on my terms and seeing things the way I see things, and they did not like what they saw in the 30-year bond auction. So home loan interest rates retreated, and we actually saw the gains that we had received melt away pretty quickly. Overall, though, over the last week, if you've been watching the show, you know that we've really been hanging on to a 4.999% interest rate on the Brent Bruce Daily, which is our very well qualified conforming conventional home loan. 800 FICO score, everything perfect. So, but what we were watching was that it was affecting the credit that was associated with that interest rate. We were at 1,800, then we were at 500, 300, 500, and bouncing back and forth because of the effects of the bond market and what was going on in the general economy. So where are we right now? Well, what we have right now is a pretty steady day. There's not a whole lot going on, but we're seeing the Fibonacci level that we've been banging up against and the 25-day moving average that used to be part of our triple floor of support starting to converge. So if the Fibonacci level is here and it's static, it doesn't change. But the 25-day moving average does this, right? We see it go up and down. Well, it's going up, 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 and it's starting to shrink. The gap between the Fibonacci level and the 25-day moving average are starting to converge. And when that happens, at one point, we have to break above or break below. So if we break above that, home loan interest rates are going to really like it, and we will see home loan interest rates come down. If we go the other way, then we have a couple of floors still under us at the 50-day moving average and another Fibonacci level that we've been watching. So what do we think is going to happen next week? We think overall home loan interest rates statistically and based on the charts and the data should improve next week outside of any economic information, global information that comes in that might make a change to that. So that's what I'm kind of anticipating is a little bit better rate, a better week next week with home loan interest rates. Where are we right now? We are at 4.999% with about a $200 credit. Now that's about the smallest credit that we've seen this week. So if you think of it that way, in general, we've eroded a little bit throughout this week. Let's hope that as the convergence happens between the Fibonacci level and the 25-day moving average, that we will break above that Fibonacci level and we will actually see a good run and maybe get up to that 4.625 again, or down to that 4.625 again, where we were a couple of weeks ago. Make sure that you like, subscribe, and share. Let me know your thoughts, questions, and comments, and I will definitely see you on Monday. Have a great weekend.